bar to be small range, lower volume, or small range, about the same volume. So we see there's small range. Look at this, about the same volume, very likely that the market's going to go down. And you can see it did manage to spike up again. That's perfectly normal. But look at this, the market pushes up, closes down, volume is still above the average. Let me zoom in here in case you can't see it. Okay, so here's the big volume spike, there's the wide range bar. Look at this, next bar volume, about the same, very small range. Next bar closes down, volume drops. There's your confirmation that the market is likely to go down. So okay, what have we just done? We've just seen the pattern. So what's the opportunity? Well, the opportunity is that, shoot, the market's going to come back down here. That's the last support. Now we can move this back out. And this is where the kit comes in, recognizing where the market's support and resistance is, where are the logical points. So we'll put one right there. You can see the market is getting some support right there. We'll go up to a 4-hour bar. Okay, sorry, I had to wait for the market or the charts to adjust. Now if I string this back across and line it up, you can see, well, there's not really that strong of support right there. Okay, so if this thing does break through, where's the next strong support? Well, we do have a logical point in this area. There would be the bottom of it, and there would be the top. So what would be the opportunity? If we're selling here at 2050, and we're looking for the market to drop here, that would be about 50 pips, because that's about $2. If it breaks through $2, where's the next level? Right here, about 99.67, for a total of about 95 pips. Okay, so we've now seen the pattern. Remember, I was just talking about it. So we see the pattern. We see the opportunity. But what now, if we go to the next stage of freezing, it's because we're focusing on what can possibly go wrong. And that is partially because we don't understand the risk. So what would be the risk? Well, the risk would be that the market is turning around and it goes up. Well, I know if the market breaks through this high, the likely direction is up. The market is more than likely turning around. Now, even though the market has made this little up move, does that mean that the market is possibly turning around and we're now looking at an uptrend? Well, let's see. We'll look at the Fibonacci retracement. Well, maybe. Okay, you can see that the market is at the 382 retracement. Now, if this downtrend is strong, what's going to happen? Well, this market will probably reverse right here. Okay, so if the market goes up, how will we know that we've shifted from a downtrend to an uptrend? Well, you can see by the chart that the market is going to really have to break through these highs over here. It's going to have to start really moving up to decisively, what's called in the market, break through these highs. Now, why do I say that? Well, I'm just debating on how far off track I'm going to go here. Well, I'll just say it this way. These are the last two major highs. Okay, can you see how the market moved down, came up just a little bit, and then dove off? Okay, this high I don't consider to be a major high because of that, because it was such a shallow move up. But these two, the market moves down, comes up, moves down, comes up. These two highs here represent important resistance. So the market's going to have to break through that in order to move higher. In fact, this whole area here, this whole zone, is going to be resistance.